Good evening, ladies and gentlemen. We are live with Walk the Block, episode number 3. Apologies, I got a little...
3.
All right, technical difficulties avoided. Welcome back. This is episode 3 of Walk the Block, where we are going to navigate digital finance. Today, we're talking about the potential first pullback of 2025 in the Bitcoin market and the ramifications for that across the rest of the crypto landscape. On top of that, there's the possibility of the United States government trying to sell off some Bitcoin reserves before President Trump takes office. And finally, we even have a quick allegory seeing that the start of 2025 is going to be similar to the start of 2024, looking at the charts. Other than that, folks, I'm Zenith. Welcome to the show. Happy to have you here. I'm joined by an excellent panel of the team as well. First off, we have our buddy Agent Jay. How you doing, man?
Doing good, man. We were talking a bit in the back screen, the green screen. A few days ago, I entered a position looking for some upside. Minimum targets were hit, but I was on the chart after the show yesterday, and I was looking for some impulsive moves to the upside. But then the 886 fib was hit, and to my even though I was only able to make like a tiny bit of profits, it was still profits. I exited the position, and it was a pretty good move because on the way, when I woke up this morning, we got that bear market dump that everybody, not bear market dump, but we got that dump that everybody was kind of clamoring for. And it's profits, still profits. But other than that, good day, man. How you guys doing?
Well, up next, we got Dace. How you doing, buddy?
I'm well. I had a busy work day. Happy to be here with the guys, and it is a entertaining day in the world of crypto. A lot of things to cover for sure.
Would definitely agree. And last but not least, we have the man behind the mask, Tracker. How we doing?
Good evening, gentlemen. Looking forward to get back into this. It's gonna be fun.
Absolutely. All right. With that being said, let's jump right into the charts and look at what data we are seeing today in the markets. Mr. J, are you ready for a screen share?
Yes, sir.
Whenever you are ready, my man.
Here we go. So just going to be a little bit of a review for some folks. If you guys want a more detailed analysis on the charts, you can go ahead and either go into the Telegram and take a look at the analysis that we do there, or visit yesterday evening's show over at the DGen Round Table side of the house. So again, like I was telling folks earlier, right? Me personally, I still have a bearish and bullish cycle count for the Bitcoin 60-day cycles, right? So it's a bit of a review. For the bullish count, you have your cycle high here on day number 43, right? And then you have a currently day 70 cycle low, right? So here's the thing to keep it simple for the bulls, right? In order for you to say that we are in this very extended, right translated 70-day cycle, right? You do not want price to sweep the lows as we extend further and further out into the cycle, right? So if you are heading into day 75, day 80, and you are still sweeping the lows, right? We made a low here of 89,164. If you're still sweeping the lows, heading into very late into the cycle, it decreases the probability that you have an extended cycle and increases the probability that you are going to have to consider the left translated bearish count, right? And so for the bears, this is kind of like a make or break this week. If you sweep the lows, once again, closer to the end of the week, you are going to have to reconsider your cycle count. And you might have to reconsider some of your positions, like if you have any open positions, right? If you're long and if you still have any open positions, you might have to start reconsidering some of those positions. Not financial advice. That's what I would personally do, right? However, for the bullish count, right? If you are indeed finished with your correction, then that means you are looking for impulsive moves to the upside, right? And not just in terms of structure, but what you want to see for the bulls, right, is you want to see impulsive moves to the upside accompanied by some volume, right? Otherwise, any price action to the upside, right, if you don't have volume to accompany it, then you're more than likely in a corrective structure and that you're probably going to get rejected back down again, right? Lastly, here is your hard invalidation, like we went over yesterday, right? Your hard invalidation for this wave 4, something that you don't want to happen, right? If you sweep the lows and you hit the 618 retracement taken from the end of your wave 2 to the end of your wave 3, you don't want to hit your $74,320 price. That is an invalidation for your wave 4, a hard invalidation. And you're going to have to reconsider this entire count moving forward. Right? So very simple for the bulls. You want the cycle low to be in, and you want to start making bullish moves to the upside accompanied by some volume, right? With your hard invalidations at the 618 fib here at 74,320. Right? And just this is just my quick summary. So that is the count for the bulls. Now, for the bears. For the bears, not that much different, right? You still have your day 43 high, but then you have a right translated cycle at day number 56, right? That was our last cycle. And you are currently on day 15. Day 15 of the new cycle. What are your targets for the downside? Well, if you take a trend-based fib extension from the start to the end, all right, that'll be your A to the end of your B wave. Your C wave, you're looking for a minimum target between the 1 fib extension to the 1.382 fib extension, right? That's this purple box right there. So for the bears, what you want to do is, before you head to bullish continuation, because on the balance of probabilities, on the daily chart, right, in terms of structure, in terms of time, in terms of price action, and where we are at in the 4-year cycle, probabilities are still higher that we move to the upside and that the bull market continues. So for the bears, all right, you're just short-term bearish and long-term bullish. What you want is for price to head down to this purple box, right? Trigger the shorts, grab the liquidity, and then move back up, right? So it's going to look something like this, right? A continuation of price to the downside, right? Hit your target box here, like scare people because you're hitting the bottom range of your support, grab the liquidity, and then go back up to the upside, right? So, but in terms of probabilities, well, let's look at some lower time frame price action. Let's go down to our 4-hour chart. So on the 4-hour, right, we're taking a look at the completion of this orange C wave, right, which would mark the end of your purple wave 4. Right? You're looking for a 5-wave structure here, a 3-wave corrective structure for your B, and then another 5-wave structure down. Now, the argument could be made that this sequence here, your C wave is already completed, right? Your A, B, C is already in. Why? Because when you make a granular analysis of the structure here, heading back down to the 15-minute chart, you can see that you do already have a 5-wave structure on the downside, right? You have a 1, 2, 3, 4, 5. This is the wick that we had later today. And so your correction could very well be in. What would make me much more confident that the correction is indeed in and that the bulls are going to retake control of the market and we're heading to upwards price action? Well, if you take a fib retracement, right, from the start of your B to the end of your C, what you want to see during this move up, right? Because you could argue that this is an impulsive move to the upside, right? You got a couple of 1-2s here. If you hit the 886 taken from the start of your B to the end of your C here, right? You hit that 886, that is going to increase the probabilities that you're going to get continuation of the prevailing long-term trend to the upside, right? And that we have a cycle low in today, right? Well, I should say yesterday, at that $89,000 level, right? Now, the bears could be arguing, well, okay, Jay, well, if we're looking for a 5-wave move to the downside, right? 5-wave here, 3-wave here, and another 5-wave sequence to the downside, the bears could argue, right? And this is a decent argument, right? The bears could argue that, Jay, this is only a 5-wave impulsive move to the downside. That's just your first leg, right? That's just your wave 1, and this is your wave 2. That's fair, right? because you could have a 5-3 and then another 5-wave extended move to the downside to complete your C wave, right? That's that bearish scenario that we went over earlier. That's fair, right? The only thing that I would say that would invalidate this move, right? If you're trying to make an argument that this is a 1-2, right? That if this is a 1-2, 3 yet to come in, 4 and 5 yet to come in to finish your C wave here and your purple wave 4, if you hit that 886 fib, then that invalidates that entire argument, right? That invalidates that entire structure. Okay, your 886 is a hard invalidation. Okay, like I mentioned in the chat, you hit that $95,000 60 level, which is the 886, then you can be more confident that the bullish scenario is going to be the prevailing narrative moving forward, right? So for the bulls and for the bears, this is what you need to look out for, right? This is your hard invalidation, right? The bulls want to hit it, the bears don't. Okay, so 95,060, and we are very close. I will keep my charts up for the remainder of the stream, because if we hit the 886, then I am going to be personally dollar cost averaging in a little bit heavier into the positions that I still want to accumulate more. Right. So that's a little bit of a granular analysis for you folks at home.
I like it. One thing I did want to mention, or at least ask you about here, is how was the volume looking today? Is it showing anything really outside of the ordinary for you?
No, I mean, we had some good volume on that initial move up, right? And as far as what the remainder of the day looked like, the volume has been decent, right? So I'm really waiting for, like I mentioned earlier, in order for the bulls to convince me that the move to the upside is sustainable. One, hitting the 886 is like first and foremost, right? One of the more important things that I'm taking a look at. And then two, that it's accompanied by good volume. And so far, we just haven't gotten that, right? Yes, is it good that we had the move to the upside after the wick down to 89,000? Yeah, of course, right? Because you gave a little bit of a recovery and a bit of peace of mind to the people who were like, oh, are we going down lower? But again, it has to be accompanied by not just structure, but by volume as well. So unfortunately, the volume is not there.
I would also agree with you. I was having similar premonitions looking at the volume and also looking at the ETFs. So specifically, looking at CoinGlass here, we have total Bitcoin flows. We had a small red candle, this one at the very, very end here. It only was about $100 million in outflows today? Or sorry, 200 million in outflows. But overall, it's much less than we've even seen in the last 2 weeks or so. And then on top of that, even for the Ethereum ETF, it's a similar story. It is an outflow, but it's a lot smaller than what we've seen in the past. The real thing for me, though, was this one, which is that the liquidations were up. We had that classic scam wick, which is that we can drop pretty far and then recover by the end of the day. But that doesn't mean that we didn't get almost $1 billion in liquidations on Bitcoin. Or sorry, not just on Bitcoin, but on the total crypto market. So it's stuff like that that's showing me that this might not be a full-on move going on, but that it's more of just some smaller fluctuations. Excuse me. And like we talked about earlier, one of the justifications that we had for this whole thing was that this could be a reaction to the news that came out on Friday. And the regular markets didn't have a lot of time to react to it. So now that we have the ETFs in play, we have to wait for those Monday openings to actually get traditional finance's take on the crypto markets, which are still open 24/7.
Yeah.
Excellent. All right. Anything else we want to look at on the chart side of the house?
No, sir. Not on my end.
Fair enough. So we have an interesting little tidbit here from good buddy Dace. Mr. Dace, what are we looking at here?
Yes, sir. I was going to say I sent you a couple of graphics with charts on them, but I don't have all the fancy letters and numbers like my friend Agent J does. But I did want to send this to you guys and show you. I think, yeah, look at the caption. Are we living in a simulation? And so something for those of you that are new to crypto or you don't know or you're still getting your hands around this concept of cycles, right? We talk about 60-day cycles. We talk about these Elliott wave patterns. Cycles and patterns are what we all sort of subscribe to try to analyze and read the tea leaves about where things are going next. If you look at Bitcoin's halving cycle and the 4-year liquidity cycle, and how those things all interlock, take a look at this graphic and you see as we cross over the new year, we seem to have a very typical volatility profile, right? Where for whatever reason, the market acts, the market has a collective mind, right? It's going to make decisions based off of not any one person's sentiment. It's an incredibly complex network, and so it's really wild to see how closely some of these patterns and fractals play out. So in the green, we've got from December to January of 25. They've got plotted out here a path that would continue to mimic this dip structure that we see from December 23. And let's see, when was this posted? This was posted at 7 a.m. And so we can now probably compare even on the day, right? We'll see what happens. This is on what does that say? Is that a 2-hour chart, Zenith?
That is a 2-hour chart. Yes.
Yep. So, and we already know that we fought back a lot of the dip. Like you said, we had a bit of a wick down to grab a lot of short liquidity, and we've bounced back up. I think that there's a reason why this happens at this time of year, or maybe there is no reason, but hey, if there's an observable trend, you can speculate on it. And so I thought that was a compelling little piece of clues of the strangeness that is the cycles, whether it's the greater market cycles, but in particular Bitcoin, has these very, very characteristic cycles that are useful to observe.
Yeah.
It might have sounded just like a little throwaway line there, but you say it sometimes happens pretty often around this time of the year. I think other people would also agree with you. We had an article from Cointelegraph today saying the Bitcoin January slump is nothing new in post-halving years. Bitcoin has fallen 10% so far in the month, and analysts say it has dropped between 25 and 30% in January in other post-halving markets. Bitcoin dumping in January has historically been a common occurrence in post-halving years. From crypto analyst Axel Bitblaze told his 123,000 X followers, we all know what happened after the 2017 and 2021 dumps. Those are both bull market years, if I'm not mistaken. So does this mean that the bull market's over? My personal opinion, I'm going to say no.
Mm-hmm.
I like to add to all of this. So it's funny when the markets dip and they get to sell off, and the local news articles, they'll try to justify why did it sell. Simple. People sold because they wanted to sell. It sounds so stupid to say that, but that's exactly what it was. When the markets get frothy like they were a little bit going into November. Sorry, I think I cut out there, guys.
You're good.
Still, all right, good. So when you get into the Q4 on a year that's had a really nice returns, people are going to take profits. That's inevitable. It's just human notion. It's also risk management that the VCs are doing. Now that we're more into TradFi, we have to be more close attention to TradFi because they creep, like we've said before on the show. Crypto is treated as a risk-on asset by the TradFi community. So that's why you see a lot of us comparing it to the Russell 2000, which is, smaller caps that are more volatile. That's what's been bucketed into. So you add that together, you add it to where we've had nice gains. You've had it to where you're into the year and they're trying to take profits and try to get their books in order to lock in those profits, to rotate on, to get their positions ready for January when they start to lay out their reports to managers, directors, what they're going to want to see, how they're going to handle their allocations going into January, as long as also tax harvesting in Q4. It's the same narrative why you see this. Anytime you have a huge run up in that year, you're typically going to have profits. Just like if you have a big run up going into May, selling may walk away. It's the reason why that term's been, pushed everywhere as well. I look at it like this too. I'm still very much in the bull camp. I do not think this is out. I think this also could be a combination, a little bit of front running going on with influencers that, there's been a lot of talk around influencers saying they're taking profits in Q1. Could have been that some of them are been adding to this pullback. It's possible that may have it to flush down more. TradFi is also looking at trying to flush out get as much of these coins as they can. You saw the massive amounts of liquidation that just took place. There's a reason why they do that. It's because they're trying to catch people's hands in the cookie jar and steal their coins. Essentially, is what's happening here. It's blatantly what it is. It's a big game of monopoly, but it's being done on a market and on a chart is what you're looking at. Now you throw in the fact that we're going into the Trump presidency. Like him or hate him, he's extremely bullish for businesses. He's going to be heavily cutting taxes on the small cap companies, which is going to translate into very risk on appetite, probably at the beginning, most likely. You tie that together and you're going to end up having basically a continuation probably in the market going into Q1 and Q2, certainly with that coming in. Now, not to say we're out of the woods and he comes to be a president, it's going to be just clear sailing from here. It won't be. There'll be bumps and hits all along the way. But I think you're getting this nice flush out now to give you opportunities to either DC back in to these, especially if your horizons over the next year, taking these opportunities to get in now. Who cares what happens over the next month or so if your time horizon is really what you're looking at? So I just want to put it all in perspective so people don't freak out thinking like, what's going on? Keep in mind, crypto is extremely volatile. No different than if you're trading the pink sheet stocks that are out there in traditional markets. They're extremely volatile. The smaller the liquidity that's in that pool of an asset, the more volatile you're going to get. And crypto is still extremely small compared to the grand scale of money that's out in the market. We have just topped silver market. We're not even at the gold market yet as far as the level of it. And then later on, eventually we'll show a picture that kind of does a great demonstration of showing you the amount of money that's in crypto compared to other areas around the world. And it really will wrap your head around like how small crypto really is. It's minuscule. So that's why it's so volatile now. Appreciate it.
Yeah, look, you made a great point about we talked about sort of the huge wick to the downside to gather the liquidity. Zenith asked a question about, hey, what did the volume look like? And then Tracker just shared his conviction about, I don't think the bull market's over, right? I think that you can use a couple of those pieces to come to that probabilistic conclusion because you don't have massive red volume candles, right? It looks like big players grabbing liquidity because you don't have a massive exit on the volume charts, even though price chart in the short term has liquidated lots of folks. That to me says that the game's not over, right? That's what it looks like to me.
Yeah. And to add to that, Dace, the VIX has never really spiked much. 20 in the VIX is nothing. Nobody bats an eye at the 20s. That's nothing. Back in the traditional markets during the financial crisis of 2008, that's what true panic looks like. When you're seeing the VIX hit 200 on the VIX, that's pure panic right there. That's where people are losing their minds. This is a very choreographed sell-off is how this looks. So pretty much perfectly normal, business as usual.
Yeah.
Like it. All right. Any final thoughts on this one before we get into some articles?
No, sir.
All right, let's do it. First one of the night. U.S. is now cleared to sell $6.5 billion in Bitcoin. Will it crash the price? We have that the U.S. government currently holds about $18.5 billion worth of Bitcoin, which it may sell entirely ahead of the Donald J. Trump presidency. Under the Department of Justice, they are poised to auction off $6.5 billion worth of Bitcoin seized from Silk Road. This decision follows a December 30th court ruling concluding a protracted legal battle over the ownership of this Bitcoin. As of January 9th, the U.S. government was holding 198,000 Bitcoin individually. That's per Bitcoin unit, not dollar value. And they say it's worth a little over $18 billion. The $6.5 billion is part of that same reserve. And some analysts speculate that that the outgoing Joe Biden administration may sell all the government-held Bitcoin in a politically motivated decision ahead of Donald Trump's presidency. So, question is, can the DOJ sell-off crash the Bitcoin price? We had a 2.78% drop after the ruling back in December, but until then, it doesn't appear that we have any on-chain data suggesting that Bitcoin has moved just yet. So, gentlemen, what do you think about this one?
I'd like to at least give it a little background on what the heck the Silk Road even is. Silk Road is not the Silk Road that you may have learned in history class during the 1500s between China, but really the Silk Road here was this was the first, I'm going to say the first black market, but it's where Bitcoin started to get used for actually trading assets. Yes, a lot of shady stuff went into that site online. It started around 2011. It's where a lot of things were being traded and sold. U.S. government stepped in, felt that there was a lot of illegal actions going on, and there were. I mean, anything you could imagine was going on there was pretty much going on. They seized a massive amounts of Bitcoin, and this is what now that they finally have gotten the go now to do. Since they've shut that down, they've confiscated all this Bitcoin. Now they're sitting on all this piles of cash to decide what they want to do. The U.S. has been hinting that they would have a Bitcoin reserve. So I could see this either move into there. I could also see this with the current administration making a move potentially just to kind of rub it in the face of the new administration coming in. Politics will be politics. I don't think they're going to do anything hasty on this. Honestly, I think this is good. They're going to be sitting with this, deciding what they're going to do. And I think the new administration and the new crypto czar will probably come in here to decide how they're going to leverage this personally before they make any moves. But just to put it in perspective, you know, if they were to dump $6.5 billion in Bitcoin, the bigger question is, would that actually dump the price? Could it cause some panic and selling? Sure, it could, but I think that would be extremely short-lived. Meaning, if the government was crazy enough to come out here and dump it all, that would be a silly move for them. They would be smarter to unwind that or sell it off slowly over time to get the most out of it, so they don't cause the price to crash, thus getting less return on the money. I think that would be just silly. And then to add to that, even if they were to sell it, it would be digested very nicely with the other markets, because all the other people that are watching crypto and Bitcoin are sitting there with their price levels. Prices come to a certain level, just like we talked about on the charts that Jay pointed out. People will be picking these up at those levels that they already have allocated. So there's a lot of support areas on the charts and price line that'll probably scoop it up. That's my 2 cents.
To add to this, whenever articles like this come out, especially when it's surrounding an entity that is as large as the US government. 2024, we had another government to deal with when it came to the movement of Bitcoin. That was Germany. These big wallets, they're tracked. We were talking a little bit earlier that one of the websites that I like to use on a regular basis when it comes to these players, the large players moving their stuff around, is Arkham Intelligence. If I could share my screen here really quickly, Z, I encourage everybody to go ahead and save this website. So what I have pulled up for you here, all right, on the screen is the US government's web wallet being tracked by Arkham. I want to bring your attention to the right side of the stream. See the orange chart here, right? The last time that we had any movement from the US government, right, was over here on the 4th of December of last year, right? That's the last time we had any movement. But more importantly, the last time we had any movement from the wallet, right, from the actual wallet into an exchange, right, which is their Coinbase Prime account, right? The last large movement that we had was a month ago, right? When that, on December 4th, right? That was a total of 19.8, call it 20,000 Bitcoin worth at today's prices, $1.92 billion. So that's not change, right? That's just a little bit under half of what Germany sold off, right? I believe Germany had a total of 55,000 Bitcoin that they sold off in small lump sums over the course of like 1 or 2 months, right? So this is not a small sum. However, I don't really care about any articles like this. It's good to know that the DOJ just gave it approval. But until we get significant amount of movement into exchanges, right? Like recently, remember, when big players move their assets onto exchanges, it's usually an indication that they want to sell. The opposite is true as well. When big players move their assets off of exchanges into self-custody, it's usually a sign that they're holding it for the long term. As of right now, right, like we're getting, this is the history of movement for the US government, right? Over the last few months. Well, actually, I don't know how far back that Arkham has their, well, actually, we could zoom all the way out. How long, right? So Arkham has been tracking their holdings since 2014, right? So a very long time, right? So you have a very long history here. And until I see that the government, right, the US government is actually making moves from their wallets into centralized exchanges, then I don't really care that the DOJ just approved the sale of over $12 billion worth of Bitcoin or whatever the number was, right? I care about the movement. I care about what they're doing with the actual Bitcoin. And as it stands, the last movement that they did was a month ago, right? So is it good information to have? Yeah. Should you panic about it? I would say no.
I think I would tend to agree with you, which is that it feels like it's kind of just the sword of Damocles, which is that if you have all this wallet information, it feels like it's going to always be hanging over your head, ready to fall at any moment. But like you're saying, there's more indicators than just looking at a wallet tracked to the U.S. government and being like, yeah, there's a ton of money in here. Yeah, I think the point that he had where it's like, if you actually start moving this around and you start looking at going to exchanges, start looking at maybe like some sort of OTC, over the counter service to try to get that going, that's the kind of move that actually indicates it's starting to go places, because it's literally starting to go places. Yeah. But until then, it's kind of a 0 to 60 moment. It's either going nowhere or it's going fast.
Yep. And just to kind of hammer home the process, throughout last year, and I guarantee you throughout this year, there will be no shortage of stories and articles that you will find online that big player X is moving X amount of Bitcoin. There will be no shortages of those stories. However, you go onto Arkham and you actually look at the wallets. A lot of the times, as soon as that story lands and then actually go and take a look, I'm like, oh, so you mean they just moved 20,000 Bitcoin from one cold storage device to another, right? That's how they hook you with these articles, right? Large amount of Bitcoin moved. Old whale that had not moved any Bitcoin for 10 years now moves it, right? And then when you actually look at the wallet, it's just from like one cold storage device to another, right? Until those things actually go from self-custody to centralized exchange, I'm not stressing. And this is the case for the U.S. government, right? Yeah, DOJ approves the sell, no movement. Joe Biden still technically does have a little bit under a week to sell, so we'll keep an eye out on the wallet.
Yeah, I'm glad we brought this up, because that's the whole point. I wanted to bring this up specifically to use it as a great example. To use it as a great example that you're always going to have bull articles and bear articles. And honestly, it's how you perceive those articles. You're never going to have 100% clarity in the market, ever. You're just not. Because honestly, if you have it where everything looks perfect and everything's going perfectly great, and the market is just absolutely stellar and there's no negative news, that's the top. I'm going to tell you right now, that's the top. So you have to have uncertainty. That's what creates a market. That's what keeps the people who really believe in what the fundamentals are in place versus the people who are just chasing news articles that are going to steer you in the wrong direction. So anyhow, yeah, I'm glad we brought that one up. I really wanted to bring it up, and I also wanted to bring it because the fact that I don't know how many people actually understand what the Silk Road even is, unless you're been around crypto for a while or followed the activities, and you would not have any clue what that even is.
See, if you said it, I think Richard Hart may have referred to the Silk Road Bitcoin as a sword of Damocles for the Bitcoin price chart. I think he's used that, and I was going to use the same term. To me, it's it's at minimum, it's them putting a spotlight on the sword over everybody's head, right? We have the power, it's at least that. Will it be more? I tend to side with you guys that I don't think so. I think it would be a pretty spiteful move for them to dump it the day before the baton is passed. That doesn't mean it's impossible. So it will be fun to watch. Do I think it's going to send the Bitcoin price? Can it trigger a early bear market or send it to zero, send it to catastrophic levels? I mean, I don't think so. I think if let's say, what are they going to do? They're going to clear out a whole exchange, and the exchange can say we can't buy anymore, right? I mean, there's going to be some limit breaking number involved there. Yeah, I'm excited to see what happens with it, and I bet it will be nothing for a little while.
I bet it will be absolutely nothing.
Yeah,
I bet it's just an article used to grab eyes. There's no actual movement going on. It's a nothing burger, man. It's a nothing burger. Whenever news about Mt. Gox happens, I take a look at the wallets. There were a few times when Mt. Gox started repayments. I was like, okay, there's actually movement happening. I was like, all right, there's going to be a bit of sell-off. But a lot of the Mt. Gox news from last year, every single time an article came out, movement. I'm taking a look. I'm like, well, it's just from self-custody wallet to self-custody wallet. It's nothing. So certainly you should keep an eye on those two, right? Because we're still, Mt. Gox repayments are still a thing. The U.S. government selling off Bitcoin is still a thing, right? At least until Donald Trump hits office, right? So we have these big players, known wallets, that if you see them move stuff to centralized exchange, yeah, you be prepared for a little bit of self pressure there, right? But
I'm more interested in it being moved over for Bitcoin Reserve potentially, because they're going to sit on this Bitcoin. It's like, see, guys, here it is. We need to go ahead and do it because they're already talking like it. So that's what I think is more interesting of the whole piece, more than anything.
Fair enough. By the way, we got RH Max in the chat letting us know that he's showing us some love. He's just enjoying
Max.
a totally not concerned crypto Twitter. Yeah, crypto Twitter was very, very calm today. No overreactions, no knee-jerk hot takes. What?
Crypto Twitter is so entertaining, man. Like, crypto Twitter is good for entertainment. It's good for crypto information too, right? Because like some of the best analysts out there are on Twitter. So just learn how to sift through the satire, because there's a lot of crypto satire on Twitter. And if you're somebody who's just new to this market and like you have a very heavy and hot trigger finger, just be careful, man, because the sentiment in crypto Twitter will give you whiplash.
And look, that's why we're here. We pulled one crypto Twitter article, right? We didn't pull all the madness and memes and the sky is falling garbage. That's going to scare you out of positions, right? That's not what we're here to do. We're here to show you guys, until this time is drastically different, we're on the side that it's not different.
Yeah. Remember, crypto Twitter and Twitter in general is built to elicit short form content, and the best way to get clicks is to have something that brings out strong emotion, right? That's why you have a lot of anonymous people on Twitter going on and just like rage baiting people. That's what Twitter is built for. So just be careful, right? If you're reading a post on Twitter and they have absolutely no analysis to back up their claims, you should probably consider it just satire.
That's a pretty fair take, actually.
Yeah.
Until you know they're a serious person, treat everything as satire. All right. Makes sense to me. All right, gentlemen, we have one more major topic for the evening, so let's get to it. We got Donald Trump allegedly is to issue executive crypto policy orders on his first day in office. So you might be asking yourself, why is this a story? And I had the same reaction myself as well, which is that there's not a whole lot of specifics. However, if the indications from inside the camp are showing that crypto is a day one size of a policy they're willing to tackle, I think it's very good news, showing that the new administration is looking to take crypto very seriously. Obviously, they have a lot of other campaign promises and a lot of other things on the agenda, but at the same time, if it makes the starting stack of executive orders for day one, I imagine it's got to be pretty important to them, which is good because it's actually following up all the lip service that was paid to the crypto community over all of 2024 effectively. So coming in from Watcher Guru, President-elect Trump expected to issue executive orders related to crypto policies on his first day. According to the Washington Post, members of the Trump transition team have been working closely with crypto leaders to finalize a legislative strategy. These members expect Trump to issue executive orders on the first day of his presidency that may address issues relating to cryptocurrency. Among these include the debanking and the repeal of controversial crypto accounting policy requiring banks holding digital assets to count them as liabilities on the bank's balance sheet, according to the report. So, gentlemen, this is probably a bit of a story that we've covered in the past, which is that during the last SEC, there has been a bit of a kerfuffle where they require banks to hold crypto on their balance sheets as liabilities instead of assets. So can one of you guys take that real quick and explain to folks why that kind of accounting matters?
Well, if you're only supposed to account for crypto assets on your balance sheet as liabilities, then how would that reflect the gains that you make over the year? Right? You see how that doesn't make sense? And so that accounting, I think the accounting standards recently changed. I have to pull up the exact article. We went over it a few months ago. But there were some major changes on how crypto is allowed to be accounted for on balance sheets that happened recently, right? And so anything that allows us to move at least right the traditional financial banking sector forward in this case, right? Just letting people um claim crypto as assets, that would be good, because it would, like, imagine if you were able to go to your shareholders, right? Like at a quarterly meeting, like let's say if you're a MicroStrategy, right? Way back when, and you had a stack of Bitcoin sitting on your balance sheet and it appreciated more than a 2x from the time period of the bear market ending on 2022 into Q1, early Q2 of 2023, right? If you were able to go to your shareholders, say like, look, man, here's our balance sheet. Look how much it appreciated. Here's how much we were holding in Bitcoin, and look how much that went up over the course of less than 2 quarters. Don't you want to get in on this, right? Don't you want to lend us more money at lower interest rates so that we could add more Bitcoin? Because don't you see where this is going? Don't you see how much money we made you, our shareholders, in such a short period of time? Right? If those accounting standards applied to crypto the same way that it usually applies to other asset classes, right? Then MicroStrategy would be evaluated way, 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 way higher than where they are now. And MicroStrategy already made it into they were listed recently on the 500, right?
Believe so.
Yeah,
Yes.
that happened a few weeks ago.
Yeah, look, they are the canary in the coal mine, man. They, and Trump, this is Trump paving the way for huge banks to run the same game that Sailor's running, right? Because now that it's an asset on the balance sheet, I can go take a loan against it, through one of my competitors or through one of my market participants. And that loop, it allows all of the banks to run sort of that same Michael Saylor hyperloop we see right now. It's wild.
Yeah. So there we go. Right. Sailor will definitely be happy. And like I said, his company would be valuated way, 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 way higher if the accounting standards actually applied properly for crypto.
Correct. So just as a quick correction here, MicroStrategies was listed on the NASDAQ 100 list, but it is not on the S&P 500 just yet. But that is a very important very important index fund to get on. So I guess I'll take my crack at this one. So the reason that I think that this is important, it sounds dumb, but I think it's very important, which is that this is a definitional change that is being proposed. We saw it last year as a proposed change under the FIT 121 bill that passed both the House and Senate and then was vetoed by President Biden at the time. But what this does is it says that if
no,
you
sir,
can
that was 121 made it through Congress and Senate, vetoed by Biden. FIT 21 never made it past the Senate.
Fair.
There was FIT 21 and SAB 121.
Yeah, thank you. I gotta get those straight.
Was what you're referring to was because the accounting standards were in 121. So you had the item right, just the wrong bill,
Okay. Back to why this matters. The definition of going from the liability to the asset in plain English terms is saying that it's changing from a risk on investment, basically a bet, to a store of value, more of a sure thing, which is saying that this is no longer a highly speculative, highly volatile item, but it actually has some sort of intrinsic value that people are willing to hedge on and bet that it's going to last the test of time. Granted, it is still a highly volatile asset, but at the same time, if you can go from liability column to asset column, that's how you can really make the transfer and show that cryptocurrency is not just a fad, it's not just gambling, it's not just short-term gains and pumping monkey JPEGs to the moon and then crashing immediately. It's like, no. This is a new form of currency. It is a new kind of investment, and it can be treated as an asset instead of liability. It is no longer a risk. It is now useful to you at all times.
Yeah. And at the very minimum, I can understand if you don't want to treat the entire industry as an asset class, right? And I think the people lobbying for this accounting change, they're people who are going to invest in safer assets in general. At the very minimum, you should allow things like Bitcoin and Ether to be listed as assets on their balance sheets, right? I don't think you're going to have any issue of any major companies or any banks listing shitcoin number 2555 and put it on their balance sheets, right? I don't think you're going to have that issue. And so at the very minimum, let stuff like Bitcoin, Ether, maybe when things like Solana get an ETF, maybe when things like XRP potentially get an ETF, those things are going to be the assets, right? The crypto assets that banks and large institutions are going to want to put on their balance sheets, right? Not anything in the beyond the 500 coins and tokens by market cap, right? I think it's fair to say that some of those
Blue chip.
you don't.
You're thinking of the
Yes.
blue chips. The blue
Yes,
chips, basically
exactly.
the top 20 ones that are actually legit. But even then, there's dog. No, I'm gonna say this, but there's dog garbage that's all up in some of those top 20s as well, technology-wise. So, but I hear what you're saying. Yes, I would agree. Yes, the large cap, blue chip, if you want to use that term for crypto. So top 30, top 40 of the best quality assets. Yes, they will start to put those on the balance sheets. Governments certainly are already starting to do that. Not just Bitcoin, other coins are starting to show up on other government balance sheets. And I think right now with this change, this is just another thing that's going to pave the way for more adoption to the crypto industry. So
I agree. I was going to mention real quickly just at the end of this is you bringing up, hey, I don't think we're going to have the risk of banks going with the super risky assets. You're going to see some new competitors step in and be like, hey, look, why bank with the big boys? We're the new crypto bank, right? This change in definitions allows for that sort of competition in the space and that sort of cross between traditional banking and the new school of crypto and how all that's going. So I'm excited to see what happens.
I put
Most
my money
definitely.
on Fidelity. I put my money on Fidelity and probably Coinbase as those two new standards.
Oh, I don't think anybody's going to come up and beat them, but I think it's going to. I think competition is good for us, right? Competition.
Free market.
Yep. That's right. That's right.
No, I was just saying Fidelity and Coinbase seem to be the two have been involved since very early on and accumulating drastically and trying to change the traditional thinking. Coinbase obviously being the first major US central exchange in the United States that all the major players are using to do the custodial aspects of their transactions for the big guys. And then Fidelity is changing the entire traditional financial markets on 401k, traditional Roth IRAs, things of that nature, because they were one of the very first that were leading the way as well. I just feel like those two entities themselves have really are way ahead of everybody else. That's
They
what
definitely
I'm saying.
have the head start. But if you get somebody like, let's say, Mark Zuckerberg decides, oh, everybody that has a Facebook account, now you all have wallets. I mean, that changes the game. They tried with the DM project and it got shot down. But you could see large social media based players get into that game. They've shown interest before. Elon has talked about X payments. There have been tangible moves towards that being a thing. And so, yeah, it's going to be interesting to see who puts their hat in the ring in terms of that new dimension of competition.
Absolutely. It's going to be an interesting 4 years, that's for sure.
Definitely. One final note that actually gives me a little bit of hope for competition in this space is that even when we had the initial ETF rush, all the different players were trying to figure out how to have their fee structures set up, and they were trying to actually compete over customers based on their fee structures. It's that kind of stuff right there that gives me hope. It shows that people are still trying to make money off it. They're willing to adjust, they're willing to shift, and they're willing to try to compete for your business. So until we see some sort of monopolistic centering on the whole thing, that's when I'll lose hope. But as it stands right now, yeah, I think we're alive and well. But yeah, I think Coinbase is my personal number one as well, because they are the custodian for a majority of the ETFs, if I'm not mistaken. But yeah, Fidelity and Coinbase, big boys right there. All right, gentlemen, that is going to take us to the conclusion of the show. We do have some, I got to say, I think January is going to be an interesting month for sure. Folks, remember, we have inflation data coming out on Wednesday. We also just got some news about Coinbase partially winning in the court over the SEC. We're going to have to see how that develops and get some legal takes on that for you. Obviously, big event of the year, effectively, is new administration coming in next week, and we're going to close out this month with a Federal Reserve meeting. So we're going to take another look at Jerome Powell and see what he and the boys are up to over there, see what they're cooking up, or if they're trying to I don't know, stave off inflation, as they claim to say that there's a higher risk. Other than that, gentlemen, anything else we're looking forward to in January?
Well, I'm looking forward to, if we do get a left translated cycle, I'm looking forward to more dips.
Ah,
But if like, I'll be happy either way because I'll still be building positions. And unless my invalidations are hit, I'm just chilling, man. I'm gonna add to positions and I'm just gonna wait patiently until Q3, Q4 of this year. That's when I'll start taking a lot heavier profits. And then we do it all over again.
I like it. As the final point of order for this evening before we do the final round of outros. Folks, there's a new asset for you to use if you enjoy all the content that we are producing over here at Walk the Block. We have launched the website. It is live. It is walktheblockndf.com. Stands for Walk the Block, Navigating Digital Finance. This is what we got. If you're looking for any of the things that we are going to be producing in the future, they're going to be housed right here. And if you would like to learn more about each of us and find all of our links, you can find that right here. Gentlemen, any thoughts on the website? I think it looks sharp.
I do. I think it looks very sharp. I love that you use the it's like a beige cream colored background and at the eggshell white colored background. So I like the contrast much better.
Yeah, so you don't get hit with that flashbang white screen when you open it up for all those dark mode users out there.
Yep.
Looking forward to add to it, man. Looking forward to add links, add content. Excited.
Absolutely.
Yep, we will be adding stuff to this. For those that listen in on these shows that might be a little confused, not quite following everything we're talking about, totally understandable. There's a lot of stuff in this market. It's a whole new terminology. Things are changing or moving at lightning pace. The rule is crypto. 1 year in crypto is like 10 years in traditional markets because it does move very quick. Even more so in the last few years because of all the regulation whiplash that we got. So we're looking to probably expand what we're doing here and try to get out there and start helping more members in various areas. So keep your eyes on the lookout for that. But yeah, excited.
Definitely very exciting stuff coming up. And we're going to close it out tonight in reverse order. So, Mr. Tracker, where can the folks find you and what do you got going on?
You can find me here. You can find me at the DGen Roundtable. We do Telegram Tuesday with you guys. So we'll be there tomorrow. It's around 2 p.m. Eastern when we normally do those shows. It's a lot of fun. More of this, but a little bit more deeper dives into the various TAs from Jay and Zenith yourselves. But outside of that, just find me here. Find us on the website. You guys can reach out to us, say hi, and then look forward to doing more things. You can see us more exposed in more areas coming. So look forward to it.
Love to hear it. Dace, where can the folks find you?
As Tracker mentioned, tomorrow, if work permits, we'll be live running Telegram Tuesday. If not, my good friend Agent Jay will hold down the fort for me. Tracker likes to pop in quite often. We've got Will Stevenson, some of the other DGen Roundtable brothers. Again, if you have a stomach for a bit spicier stream, a bit more complicated stream, it's a great spot. And so looking forward to, like I said, watching the days tick down until Inauguration Day and Gary Gensler gets fired. It's going to be glorious.
Steps down, sir, not fired.
No,
down.
he's pulling the "you can't fire me, I quit first" move. That's what he's doing, in my opinion.
100%. 100%.
All right, Mr. Agent J, where can the folks find you?
Well, you can find me on X at _P90Hex. And sorry, I keep confusing those two things. Just goes to show you exactly how often I do not use Instagram. You can find me on Instagram at agent_J Schroth, on X at _P90Hex. And as Tracker and Dace alluded to, you could find all of us over also on the DGen Roundtable side, where we do a lot more content. Telegram Tuesdays tomorrow, emergency streams from me. And depending on how the market turns overnight, right now, the bulls and the bears are fighting for that invalidation level, right? I have my chart pulled up right now, and like nobody is giving an inch, right? There's a lot of resistance. There's like a point of control there, some volume resistance there. And it's just entertaining to watch. So if we get rejected heavily here at these levels, right, that 94,900 level, and you start moving back to the downside with increasing volume, the same rules applies for the bears as it does for the bulls. If the bears want to take the market back down, you have to take the structure and you also have to take the volume with it. So keep your head on the swivel, and we'll see what happens. It's either prices go up and we continue the prevailing trend, or we get a bit more time to dollar cost average into positions before we get that parabolic run headed into March and then later on in the year, Q3 and Q4. So until then,
I like it. Folks, I am Zenith. I have been your host for the evening. You can find me on Instagram and Twitter at ZenithDI. That is where you can find me and everything I got going on outside of this, the DGen Roundtable stuff. But more importantly, if you're looking for anything Walk the Block, again, go check out the website. That is going to be where we are hosting everything and showing you all of the good stuff and giving you links to everything you need to go. This should be the one-stop shop, the central hub you can start at, and then from there, you can filter out and find whatever it is you're looking for. Outside of that, folks, thank you so much for tuning in with us tonight. Like we talked about on the show tonight, we know that the markets are in some turbulent times right now. We're still trying to hunt down those 60-day cycle lows and understand what's going on with the news, with legal, with courts, the government, all of it. But again, thank you so much for spending time with us tonight, and we hope that you have been able to help navigate your digital finances just a little bit better. Alrighty, until we catch you guys next time, good night.